Globally, we have seen bonds become the biggest bubble in history. When they crash, they will be the biggest crash in history. Previously, we witnessed rates increase just marginally and trillions were evaporated. The market simply cannot stand on its own. You came here for the truth, so let me unveil that for you. Today, we are going to talk about bubbles. You will see these three here, and starting on the left-hand side, the 2000 tech bubble, estimated losses, $5 trillion. Then the 2008 housing bubble, the estimated losses, $15 trillion. Today we have 2017 government bond bubble, estimated losses. All I can tell you is that we have exceeded the stock markets with the bond markets. Bigger than that, far more dangerous, because the government itself is on the hook. When you think about this, we're talking about public sector. This is very important to note because if you look at the previous crashes, we were talking about the private sector. And this time around, it's the governments themselves. There will be no telling how they will be able to handle this. They can't just write off the debt because other countries are not going to like that. We are talking about markets bigger than stock markets. And all of this is trading on this idea that the government will pay back. But they can only pay it back if you give them a longer and longer and longer period of time to do so. Meaning, they never pay it back. What's also interesting is that typically when you buy any sort of asset, you would want some sort of return on that investment. Well, that doesn't really exist with a lot of the bonds. Today, trillions and trillions of dollars worth of bonds are selling at a negative interest rate. So you literally are getting back less than you gave, taking all the risk that's involved, guaranteed to get back less at the end of the day. And that is when you know that everything is going down the drain. All right. US non-financial corporate debt as a percentage of GDP. The dot-com bubble. You can see this. Then we head down the housing bubble, and then today, the everything bubble. People don't realize this, but as a percentage of GDP, every time it hits this mark, things get really messy. And here we are again. But there are constantly excuses. I'm getting tired of it personally. If you have a lot of money invested in the stock market, do whatever it is you need to do, okay? But just take the information for how it is and just read it, understand it, then make your own decisions. Don't just dismiss it. It's very important. Where's the fear factor? Chicago Board Options Exchange Volatility Index, the VIX. Look at this. 1990s tech bubble. You can see this big dip. And then what happened afterward? Well, we all know. And then the 2000s housing bubble. Everything was just fine. And then, oops. And now today, the everything bubble. We have the lowest VIX that you'll ever see, at least up until now. How low can it go? I'm not sure. But what's to follow will certainly be painful. History is a guide. History doesn't necessarily prove the future, but it is a good guide. And then we look at this. Market reaction to a 0.7% change in rates. This information, you'll see this article, for example, from 2016. Global bonds suffer the worst monthly meltdown as $1.7 trillion is lost. We are looking at a time when the market is so unstable. And yet, if you look at the VIX, everything looks just fine. If you look at stock markets, US anyway, they're rising. So what is it? What's the deal? Look at this. This tiny increase in long-term interest rates created a massive $1.7 trillion loss for bond investors. Look at it. It's a blip. It's a little blip. And $1.7 trillion gone. Sleepy bond market stirred by a November like no other. And worst month in 12 years. These are all the titles. You saw that. Minuscule changes. What if interest rates get to 4%? What if interest rates get to 5%? That historically is very low. 4%, 5%. Look around the world. Many countries have much, much higher interest rates. And yet, the US, Canada, the UK, other countries have extremely low interest rates. And percentage-wise, this would make a very, very big difference to the markets, whether it's the bond markets, stock markets, everything's interconnected. We're talking about a major disaster coming right before our eyes. You're not allowed to talk about it, of course. People are sensitive. I understand that. So I'm not going to say anything. I'm not going to tell you where the direction is heading. I'm not going to try and convince you of anything. All I'm telling you is that there was a time in which a small change in interest rates made a very big change in the amount of money that was lost by investors. What's going to happen in the future? I don't know. You tell me. And I'll leave you with that. If you found this video informative, please give me a thumbs up. Remember that when you give me a thumbs up, it helps to push these videos higher up into the YouTube search ranking. So please just click that button. It really supports me. So I do appreciate that. Thank you. And if you found the video informative, I know you'll find my books, The Money GPS and my newer release, Global Economic Collapse, even more informative. You can actually flip through this book. If you go over to Amazon, they have a look inside feature that will allow you to flip through the pages of these books to see if you like them. Take care.